Hey everybody, welcome to today's video. I wanted to break down this trade on Tesla, the setup, the trade, and kind of talk a little bit about my thoughts in the market and talk about what's actually happening here. Welcome everybody to Trading the Gap. If you're new here, my name is Mal. If you're not, welcome back. It's good to have you. I'm noticing the community starting to grow, so glad you're finding value in these videos. Right now, I'm trying to gauge if I'm going too fast or too slow. So I'm looking for reaction and some comments, but I try to be as helpful and as clear as I can. If you've watched any of my other videos, you'll start to notice a pattern. And that pattern is that I tend to get right to the point for the most part. I personally do not like videos. I don't like 40-minute videos with a whole lot of fluff in them where they're talking circles and not really getting to the point. That I've noticed that tends to frustrate me, and I fast forward them, try to get to the information that I'm looking for. So my videos tend to be between 10, 15, 18 minutes long, and I focus this channel on helping beginner traders get started and get a little bit better. I want to provide information that I wish I had when I started trading. So I wanted to break down this Tesla trade today. I actually did not take this. I seen it setting up. I wanted to take it. I was just unable to. All right, so I got my pen. So on the left side of the screen, we are looking at the 5-minute chart here, and this is Tesla, ticker symbol TSLA. On the right-hand side, it's the same chart, just on a 1-minute time frame. So a candle forms every 1 minute on the right-hand side and every 5 minutes on the left-hand side. So basically, 5 1-minute candles form a 1 5-minute candle. So I was looking at this trade today, and what I seen was we had yesterday, we closed here, right here. This is the yellow dotted line of yesterday's close. Now I know this candle pokes through a little bit down to here, but the line is up a little bit higher, most likely due to spread. Tesla tends to get very spready, anywhere from $1 to $5, $6, I believe. It's very, very spready now because of the volatility. So yesterday on 3/9, we closed here, and then we gapped up and we opened here. So on stocks, gaps are primarily what I trade. So if you know how to read the candles, right? So let me zoom in here and we'll talk about this. And I want to break this down a little bit. All right, so we closed here. After our session, we gap up and we open right here. So a red candle right there. So what happened as we opened is we pushed up. Now this is on the 5-minute. We pushed up, buyers came in, and then sellers immediately came in and rejected. And you see that here, right? So it's the same thing on the right-hand side, which is the 1-minute chart. We open here. We push up, and then sellers come in, and immediately we get rejected right down to this blue line, which represents the pre-market low. And you can see that we bounced off. So let me delete the arrows. So what I was looking at is this sell-off, bounce, retest of the previous structure low. So we have our first low here, and our second retest came in right here. So at this point, if we break through, it would be a continuation, right? So let me switch colors. So if we break lower, it's a continuation. And if we go higher, we now form a double bottom right here. First bottom on the yellow, second bottom right here. As soon as we start curling up, I was watching this trade. I just was unable to take it. So right now, I still work a full-time job. We have some hashtag life goals that we're working on, so I still work that for income as well as trading. and I don't get to trade very often during the day, but I trade when I can, when I have days off and things like that. Sometimes I take days off just so I can trade. And I have been trading futures at night as well because futures open at 6 o'clock at night and they run all night. So if you work full time and you're interested in trading when you get home, that is something to consider. So I was looking at, we sold off, right? Came up, retested, and then we bounced. So what I'm going to do is I'm going to leave this drying here. So on the double bottom, what I'm going to do is I will post on the left hand side, I will post a picture of a double bottom that I have discussed multiple times in my previous videos, what they look like and what I look for. And the reason I watch it on the 5-minute chart and the 1-minute chart, sometimes you can get a much clearer picture on the 5-minute chart than you can get on the 1-minute. So what I'm going to do is zoom in here on the 1-minute so you can see it much more clearly. Okay, so let me get we'll go back to the arrows. So bottom 1, bottom 2. This low here, this low is much higher than this low, which puts me on alert. As soon as I seen this green candle right here, as soon as I seen this candle right there, this puts me on alert for a potential double bottom. So if you've watched my other videos, I've talked a lot about how to trade these. And what I want to do is I want to show you the entry, the stop, and the target on this if this is something you are interested in trading. So we come down here. I'll draw this out one more time. We bounce, come back down to retest, and then we start curling up. So for me, what I would do is I would ignore this wick. My entry would be right here on the white line. You can take it above this wick here. That's a little bit high and your stop becomes really large. So now you're at your entries at 648 and your stop is going to be at 640. So that's a little bit too big, but you could take it there. Let me get my other drawing tools and I think, let's see if we can leave that. Yeah. So what you can do is you can come down here if you're using Think or Swim, down on the right hand side on the bottom here, and you can either get the Fibonacci extensions or I use retracements. Retracements are used to measure the retracement move in the market, but I use them as an extension tool just because that's something that I've been used to doing. So you come down here, grab either or, grab your Fibonacci extensions. So my stop would be right here. This is a conservative stop right down here. Come up right to the entry. We extend it over. So this would be my entries here. My stop is at this red line here. First target is here. Okay, I hope you're following so far. So what we can do is stop is here. Entry is this white line. And the target you can see is at 100%. So your target would be here. Secondary target, if we make it there, would be here. What I like to do is I like to take a partial here at 1-to-1, and then I like to take the rest of the position at 2-to-1, or potentially let it ride if it looks like a lot of buyers are coming in and pushing the market up. So let me delete this so we can see what's happening. What I want to do is I want to tweak it now because typically what I like to do is I like to take a little bit more of an aggressive stop. So the stop would be under this low here, not the previous low, but under the low of the green candle. So what we have going on, this trade actually gave you 2 entries. When we broke out, we know, let's see, let me change the color. We know that our entry is right about here. So entry 1 would be on breakout. Entry 2 would be on a retest because as we know, I got to keep changing colors. So this is a retest. As we know, that previous resistance, which would be this white line here, now turns support once it's retested and we go up, right? And if you want to get technical about it, there was actually a breakout. We came up, retraced, and then there was a breakout right at this level right here. So this was a breakout, and then we shot up. Now, of course, it didn't go up very high, and I would not have taken that breakout because we were going right into VWAP. But you can tell we shot through VWAP. Then we have, let me get my arrow. Then we have this indecision here. So buyers stepped in, pushed right through VWAP. This is the volume weighted average price. And a lot of times in the market, the price action or price reacts from that level, either as resistance or as support. In this case, we're testing it as resistance to see if we can break through and hold as support and possibly go higher. But we didn't do that. We broke through, and then immediately we got a doji candle right here, which means indecision. So we're not sure if we're going higher or lower. Then we got a small red candle, followed by another red candle, followed by this very, very large pin bar. This is showing us rejection of higher prices. So let me get rid of some of these arrows. So what happens here on this pin bar, so there was multiple trades is what I'm trying to say. If you took this double bottom on the entry here or on the retest here, you could have got a 1-to-1 target and then move your stop right to break even for a risk-free trade. And if it hits, depending on where you put your stop, so this is one thing that's interesting is I tend to have aggressive stops, and this would have been a 2-to-1 risk reward for me. It would have hit my secondary target. If you took a more conservative stop, it never made it to your 2-to-1. And a textbook stop would have been below the low, so it would have been here, below the initial structure low. But in any case, you would have got your 1-to-1 target. Some people like to hold it till they hit 2-to-1. I like to go to break even. I want to be able to get some money out of this. If I get 75 or $100 out of this, and then I go to break even, and then I look for my next trade. So this was the first trade. And then if you trade VWAP rejection, there was another trade on this doji candle right here. And you can actually sell it. So let's clean this up and we can look at this. Let me delete this. So what I want to do is I want to post some boxes here and break down our risk reward. So entries here, we know that. Entries here, stop below this low. Here's our risk in the red box. And here's our potential reward. So we know that it never made 2-to-1, so you would have got out somewhere here. You got 1-to-1, right? Second trade, if you caught this right below this pin bar rejection, stop goes above the high here. Stop goes right here above this high. There's your stop. And then you sell it short here. So depending on how quick of a trader you are, how aggressive, you could have taken this, could have made 2 trades on this. And you can see on the 5-minute, we pushed up, we pushed down, and then we just, here's another nice pin bar. If you missed the pin bar on the 1-minute, you could have taken this 5-minute pin bar right there. So your entry would have been under the low. Your stop goes above the pin bar high. And then we are basically in free fall. Now, like I said, I was not able to take this trade, but I was watching it and it felt really bad not being able to participate. So another thing, if you watch my last Tesla video, let me clear all these drawings. I have this level on. If I scrunch the chart up, this is a level I talked about. This is the 4-hour resistance level. I just talked about that in my last video. And if we go to the 4-hour chart, I believe the video was called Market Analysis, Finding Areas of Value. So you could clearly see that this level is being respected on the 4-hour chart. And then if we fast forward here on the 1-minute, you can see that we bounced. We created another double bottom, But this time, the double bottom did not work. So if you took this one, right, here's one bottom, here's two bottom, and then the entry would have been right here with a stop right below this low, and you can tell it didn't work. We broke right through. And not every trade works, and I say that a lot on my in my videos. The idea is not to get every trade right, but the idea is to win at least 50% of the time and to win much bigger than we lose. So ideally, you want to win twice as much as you lose, right? So, okay, I'm changing this back to 5 minute. We talked about the gap in the beginning of the video. This yellow line here was yesterday's close, and you could see we bounced right off of that. And if I zoom this in here, you could see a nice pin bar right there. And pin bars is something that I talk about, is something that I trade. So on the 1 minute, we don't have a pin bar. We do have a double bottom. However, as soon as we broke through this area of resistance, buyers stepped in and bought it right back up. And then we broke out of the area of resistance, came back down to retest it. We're still in that area. And then we shot up. So if you were not able to trade the 1 minute because it moves too fast for you, you can always trade this on the 5 minute right above this high, because you know we see this pin bar rejection right here. Stop goes right below the low, and we take it right back up to the VWAP. And so what we had was another double bottom. On the 5 minute chart, this is a pin bar. To me, that's a pin bar. I know that the wick is not super long compared to the body. Some people say it's only a pin bar when the body is really small. But to me, this wick shows rejection of lower prices, especially sitting on yesterday's close. So this is why I watch the 5 minute and I watch the 1 minute. And then what we had was we had a breakout here and then a retest of previous resistance, now turned support right back up to the VWAP. And the same thing here. This was a little bit harder to see, but we bounced off this level, came back down, created a double bottom, right? And then we started pushing up higher. So this is either your breakout. This is more of a breakout for me, but the idea is the same, right? Aggressive entry here, conservative entry right up here, stop goes right here, and then you just basically ride it up. So that is how that looks. I'll throw the picture up of the breakout as well. And a breakout is something like this. We come up, we retrace, and then we skyrocket. I really wish I took this trade. I did not take it, but I hope the analysis is helpful. Next video I have is a live trade that I did take on futures. I wanted to post it today, but seeing this Tesla trade made me a little bit jealous that I wasn't able to participate. All right, I hope you enjoyed this video. I'm going to stop it here, and I will see you in my next video.